It's now time to head over to the fixed income and FX market as investors have their attention fixed on today's 480 billion naira T-bills auction. Ibukun Omojufehinsi, Treasury Team Member at Access Bank, joins me now for more market movements. Ibukun, thanks a lot for joining us on the show today, and it's quite a busy September we've had so far. But before we get into the T-bills auction for today, let's start off with yesterday's OMO auction. Walk us through the offer, the subscription and allotment volume.
Thank you very much for having me. Yesterday the CBN floated an OMO auction whereby the CBN was offering a total of 600 billion. We saw a subscription of over 1.1 trillion for the 84 tenor maturity, while there was a sale by the CBN of 620 billion. We saw the stop rate close at 26.44%, and this is just to be able to tell us about the appetite that investors have for these OMO papers, which is actually even a high-yielding instrument.
And now, let's also look at how we're seeing liquidity at this moment. It's quite robust. We're seeing marginal rate increases due to the OMO auction settlement. Walk us through that, and then in terms of FX movement as well, looking at the supply on the back of the FPI participation we're having at this moment.
Yes, in terms of liquidity, market liquidity opened in a credit of 1.3 trillion. This is a 100 billion decline from yesterday levels, while we saw the OPR and overnight rates stay around 26.5% and 26.59% levels. This liquidity in the system is as a result of the fact that, yes, we're pretty much seeing some OMO maturities that actually even happened yesterday. We have an OMO maturity of over 400 billion that happened yesterday. So for going into this month, we still expect that the market would be pretty much awash with liquidity. We are expecting a further of 1.1 trillion OMO maturity even into the system this month, coupled with a coupon payment of over 500 billion that will be hitting the system this month. So we expect that the CBN would continue to float OMO just to be able to mop up the liquidity that is in the system.
And when we're looking at the bond curve now, let's also touch on where we are seeing demand concentration.
Yes, so for the bond curve for yesterday, in terms of the bond, we saw the bond market opened on a quiet note, but midday towards the trading section, we saw quite some demand for the 2033s and the 2031 maturities, where they were trading around 17.4% and 17.6% respectively. But towards the end of the trading section, we saw a decline of 10 basis points even across the benchmark curve.
And then when we are also looking at today's activities now with this primary market auction we have for today, what's the expectation? What's your take around subscription? And then do you think we'll see the continuity around the allotment strategy persist?
Yeah, as a result of the liquidity that is in the system, we expect an oversubscription, even for the NTB auction by the DMO today. We know that the DMO is actually even having an auction of 480 billion. The last stop rate for the last NTB was around 17%. That's for the 365 days. So we still expect an oversubscription as a result of the market liquidity, and we expect the DMO to still maintain rates as at the previous levels, around the 17% levels.
And I know it's still early days in the month of September, but we have a whole lot of focus on the inflation data for August and how this might also filter into the next moves we should expect from the MPC. It's also weighing some of the developments with the US Fed. But walk us through your expectations around the inflation print for August and how you think the MPC might likely unfold later in a fortnight.
Yeah, for the inflation, we've been seeing the fact that inflation has been declining consecutively. We would have to talk about the fact that we've been seeing stability in terms of the FX, which is currently trading around 1522 levels. We had it closed around 1525 yesterday. So we've seen stability across even the FX markets for the past 2 months. thereabouts. So we expect that as a result of the stability in the FX market, we expect that the inflation should decline a little bit from where it's currently trading at, from where it currently is at 21.88%.
And are you one of those who are thinking that a rate cut will still not be in the picture for now, but possibly in November?
We expect that there's going to be either rates maintained or a rate cut for this month. That's based on the MPC decision that's going to happen by this month, later this month.
It's a dicey affair, and I understand why you're conservative about your response here. But Ibukun, thanks a lot for your time. That was Ibukun Omojufehinsi, Treasury Team Member at Access Bank.